all these rejections from the middle Bollinger Band.
Resistance we're going to need.
If you actually see here, we get a
And we'll look for a healthy higher
I
low.
would not
don't have
be
the
convinced
pullback
to
to
enter
cross
long
structure.
trade.
Hello crypto friends, hope you're having a good Sunday. We're going to look at Bitcoin, Ethereum, ZRX, OMG, and XRP. Then tomorrow we'll get back into Litecoin and Bitcoin Cash. So we're checking out Bitcoin on the daily time frame first. Right now we have some pretty wild volatility on the shorter term time frames. We'll get to that in just a moment. We've got a clear daily lower high pattern. This is now our 6th day in a row with lower highs. So we're keeping an eye on that pattern, and it will be notable when it breaks, and we'll be looking for that to indicate the short-term bounce for the daily lower high that we are anticipating. Anything under 71.63 is a little lower high on the daily. So even if we do get this bounce and we do break the lower high pattern of each individual day, we're not going to break the lower high pattern on these little bounce attempts that we've seen on the way down. So we were watching the 4-hour pattern as we were at the end of the video yesterday, and we were highlighting the potential setup of the inverse head and shoulders pattern with the left shoulder, the right shoulder. And at that point I said I want to see some healthy 4-hour consolidation. I want that right shoulder where I will look to make an entry. And then if we get the bull break of the lower high pattern by breaking 64.86, that will get a break of that pattern in terms of the reversal inverse head and shoulders. So what has happened since then is the consolidation has gone pretty well. This is exactly, well, I won't say it's exactly what I was looking for, but it was pretty much what I was looking for. Let's zoom into the shorter term time frames. So yesterday after I made the video, I went and said, all right, I want to put some bid orders in case we get this healthy 4-hour consolidation that I'm looking for to establish the higher low and the right shoulder. So I had bids all stacked through the 6200s, and then we dumped very fast. And I was sitting at the computer as this dump was happening, so all of my bids filled. At that point, that was about 40% of my entire stack in terms of my capital that I had sitting there. And when things got extreme and the 5-minute RSI got down in the single digits, I said, all right, if we break 6,200, I want to add here as well. So I added 6181, 6171, got a couple more orders filled down there. So by the end of it, my average was about 6230 or 40 or so, about 6240. And I was content with that. But what we got from this pullback was it was not the ideal pullback. I said ideally the bulls will hold 6250 on this pullback, or the low 6200s. It was a bit more of a pullback and to a bit more extreme RSI levels than the bulls would have liked. So as soon as that happened, we were left with a scenario on the 4-hour time frame that pretty much said, all right, best case scenario, these bulls are going to be looking for an equilibrium because of the amount that we pulled back from 64.86 all the way down to 61.69. The odds to see that pullback and then a straight move to a higher high are not likely. We're likely to bounce, set a lower high, and tighten up. So that's exactly what happened with our high, higher low, lower high, higher low. And we just got a bull break here on the shorter term time frames. There it is on the 5-minute, one of those spikes out of nowhere. But you can see that the bears were just waiting for it. And where were they waiting? They were waiting at our key neckline resistance of 64.86. Where did we reject? 64.82. And as soon as we rejected, it was a very significant rejection. And again, this is not the kind of rejection where people are taking profit and shorts are entering trades in terms of using limit orders. It is very clear that shorts are intentionally waiting at a certain level, and then they're using market sell orders to crush the price as significantly as they possibly can from that breakout attempt. So the only way that you're going to see the price do this from 64.82 all the way down to 62.25 a few minutes later, $260 of pullback in a couple of minutes. Let's see exactly how many minutes it was. So 2 minutes we're at the top, 6 minutes later, we're down at that low. So the only way that the price is going to move like that is, number one, illiquidity. There's not a lot going on. There's not a lot of orders in the order book. So using market orders smashes through all those levels and the price moves really quickly. So again, it's not people just trying to sell with market limit orders when the bulls hit that price. It is people intentionally, people in bots, intentionally waiting for that resistance level to be approached and then just market sell. They're not trying to get as much as they can for their sells. They're trying to drive the price down and control the price. So they were successful this go around, but the bulls also bought the dip. So here we are after that wild volatility. We're back right where we started from before it happened. So not a whole lot of information given. The 4-hour time frame did break a resistance level. It did break that equilibrium bullish by breaking this little lower high here of 63.85, but we didn't confirm the pattern because the neckline did not break. So now what this does is this makes this resistance level even more clear. Just like the bull move on the daily time frame when 6,800 broke, that was such a significant bullish break because of how clear that resistance level was. We had rejected multiple times on the daily time frame at that point, so everybody was saying, all right, if this level breaks, I'm going bullish and I'm covering my shorts, and that's what the psychology of the market was. So the more clarity we have, if we get the bull break, the more shorts are going to cover at this level now, in my opinion, because now it is a double top and it's very clear. That being said, if the bears continue to defend this level and the bulls are never able to break it, then we're going to see the shorts hold on to their positions and have no rush to cover. So that will keep the bears in full control as long as this resistance stands. If this resistance does break, we're going to be looking for an exponential cross of these moving averages. I'm going to be looking for the price to very quickly be making its way up to the 67, 6,800 range. And we will have one more resistance level at 66.33 to be watching. But I do believe that if we see that break, that level will break as resistance as well. So a whole lot of wild volatility in this market. I am not doing stop buys. If I do not get an entry on consolidation using limit orders, then I am not in a position because the stop buys are not getting followed through. And I don't want to be using stop buys in a downtrend environment. Yes, there have been a couple instances where stop buys have worked really well. That 68 level was one of them. That was an inverse head and shoulders pattern on the daily time frame. This is just a smaller version of that inverse head and shoulders pattern. But again, it is just, the amount of times that a stop buy has worked compared to the amount of times that a stop buy has not worked. It's not putting the odds in your favor to use a stop buy in this scenario. So I made that entry on the higher low, and now I'm patiently waiting. I did take some profit. So again, I'm playing against the trend with this bullish position. So I entered a pretty large position because I added under 6,200. So what am I going to do to protect that position? I'm going to take profit when the bounce follows through. So we got our support level. We started to bounce. I sold my position in the 6,300s, not all of it. I sold 40% of what I had bought on consolidation at profit. So what that does is for the remainder of my position, it lowers my cost basis. So my original position, if my cost average is 62.40, after selling 40% of that, my cost average is now around 62.20 or a little bit less than that. So it gives me more breathing room, more comfortability, and less risk, meaning less of a large position in case the bears just keep the trend in their favor. So where we stand right now, I'm still holding a sizable enough position where if we do get a bull break, I'm just fine in terms of the amount of profit that I'm going to make. It'll be great. I won't feel any FOMO. But in terms of not wanting to give up too much on if we get a bear break, I'm using stop losses. I set my stop loss level under 61.69 last night. We dropped down to 61.90 and it didn't knock me out of the trade because it was just another 4-hour higher low. So 61.90 and 61.69 are the most important short-term supports, and resistance is all about 64.86. The shorts chart, we're seeing some shorts climb right now. Not a whole lot of significant action over the last couple dozen hours, but I personally want to see these shorts climb as high as possible, and then I want to see a break of this resistance. That's the scenario that will give the bulls the most follow through on a bull break. If shorts continue to cover and we drop down into a lower low and there's less shorts than there were yesterday, and then we get the bull break, I would expect less of a follow through because there's less shorts getting liquidated and there's less shorts that are covering their positions. So that's just a factor that I keep in mind whenever I'm keeping an eye on shorts and clear resistance levels. I know the more shorts that there are and the more clear a resistance level there is, the more explosive the bull break will be. Checking in on Ethereum and how it's responded to all this wild action. Daily time frames giving us an inside bar. Support is 313.29. Resistance is 328.12. If we look at the shorter term time frames, the 4-hour chart's in a bit of an equilibrium. Not the exact same setup as Bitcoin. There are some differences. We have our low, high of the bounce, higher low, lower high, higher low, and lower high right there. So pretty much as tight as we can get. We're going to be looking for a break here within the next couple hours on Ethereum. 316.41 is support. 326.84 is resistance. So a tight 4-hour equilibrium to be watching. A break is imminent. And of course, where are we struggling at? What resistance? It's the exponential moving averages on the 4-hour, which we have been rejecting from all the way back at $460 is when we lost support and started rejecting from these levels. And here we are having dropped all the way down to 305, 150 drop, a 30% drop with the 4-hour exponential moving averages being a beautiful guide the entire way down. So tight range to be watching. Perhaps this will give us some clues as to what to expect for Bitcoin, or perhaps the break of Bitcoin will lead to the break of Ethereum as well. ZRX USD, the weekly time frame, really nice equilibrium setting up. This is one that I would want to keep an eye on for when this weekly equilibrium does break. Even if I'm not going to trade this for the next 2 months, it's a pattern that I want to check in on. So our higher low is 597. Actually, I take that back. It's 58. So 58 is the higher low, and resistance is 134. And we're going to be looking here for a higher low to form compared to 58 cents. And the indication that our weekly higher low will have been set is when the daily trend changes. So our last lower high on the daily is 944. And until that level breaks, the bears have complete control. We do have a higher low now on the daily. So our low is 787. We have a higher low at 816. And now the bulls need a break of 944 to change this daily trend and make us confident our weekly higher low has been established. So at this point, I would only be watching the daily and weekly time frame and patiently waiting for things to get a little bit more clear. If I wanted more levels, the 4-hour is an equilibrium as well. Low, high, higher low, lower high. So the levels are a bit tighter if we zoom in. OMG USD on the weekly time frame dumping down. Not a whole lot of support down here. We're looking down at 275, and you can see very clearly a tight range that broke bearish just a few weeks ago. The daily chart oversold, trying to bounce. Again, lower highs every day now for the last 6 days in a row. And for a bounce to get going, we have to change the 4-hour trend. Just like everybody else, we are struggling at the 4-hour exponential resistance. Here we've been struggling ever since $7, and we dropped all the way down to 385. That is almost a 50% drop. That's about a 45% drop in just a few days, really. Actually, no, I take that back. It was a few weeks, couple weeks. But again, the 4-hour RSI and the 4-hour exponential moving averages set a clear guide, keeping these bears in control. Our last lower high was at 436, and our support is down at 410. And we're looking for a tightening range within here because it's a pretty wide range, and the exponentials are going to continue dropping down. And until we get a bull cross of those exponential moving averages, we are still at risk of seeing continued rejections. So even if we get over the 12 period, the 26 period is still acting as a backup. Have to get over both levels and see them start to curl up for that bull cross to get any kind of significant bounce on the daily time frames. And that's how we're going to be looking for that daily bounce to follow through on any of these names. With these 4-hour exponential resistances, have to get over them for the daily bounce to do anything. So I would be watching the 4-hour chart for OMG, but well aware that there is very limited support nearby. Again, the daily chart, if we're going to look back and find where the next daily support is, 275 was that little long lower wick, a bit of a flash crash back there. But other than that, we're looking down at 335. So again, either way you cut it, there's a lot of space before we find any real supports. So a bit of a falling knife scenario for OMG. XRP USD, also with a very clear bear break. Bulls were trying to establish a base of support. It fell apart with a spike in bear volume. The volume on the weekly time frame, whenever I see continued declining volume, we did this with Bitcoin before the bull break in July. We look for a spike in volume to break the declining pattern, and we obviously make significant note of the direction that that break does occur. So for Bitcoin in July, the weekly time frame was giving us a lower high pattern on the volume, and we spiked it with that 2-week solid bull move. So we're going to be looking for the same thing, or actually I should say we were looking for the same thing on XRP, and here it is on the weekly with a bear spike. So again, where's the next support? Nowhere nearby. Falling knife scenario. 228 is the next support, and that is currently a significant percentage away. The daily time frame is very oversold. We've been seeing lower highs on the daily time frame for a very long time. 3, 6, 9, 11 days in a row of lower highs, just like Bitcoin. Bitcoin, how many days in a row of lower highs have we seen? The answer is a lot. It's 3, 6. Actually, take that back. We did get a little reset there. So it is only 6 days in a row. So XRP, a lot more extended in that same pattern. So the inside bar is currently forming. The 4-hour time frame, you guessed it, exponential resistance has been rejecting the price ever since 44 cents. It's still rejecting the price. We're looking down at support, resistance, higher low, lower high, equilibrium here as well. I'm looking at 294 support and 309 resistance, and we'll be looking for a break there sooner rather than later. Exponential resistance driving the price down. So clear 4-hour equilibriums that are due for a break. XRP is one of them. ZRX has a decent little 4-hour equilibrium. It's not as tight. And Ethereum has a pretty tight 4-hour equilibrium similar to XRP. So Bitcoin's not giving us much information because of this choppy action, all this back and forth. Now I'm watching 15-minute inside bars. That's going to give us the next short-term indication of who's going to win this tug of war. You can see inside bar, and we're looking for a break and a volume spike after all this volume continues to drop off. And we're looking like this candlestick's going to form another inside bar, 3 minutes left to go, and we should see a break on the following candlestick and an increase in volume, as volume has pretty much come to a standstill while we are within this tightening range. So that's where we stand overall. Again, when we see this kind of wick, upper wick and lower wick, that tells us it's not a beneficial trading environment, whether you're bullish or bearish. At this point, the play was entry on 4-hour consolidation, anticipating the higher low, and now we're patiently going to watch. Do we lose the 4-hour higher lows, or do we break our double top of resistance and finally start the daily bounce where we will anticipate a lower high? So the bears have comfortability on every time frame still. If we get this bull break of the double top, they lose comfortability on the 4-hour time frame, but they keep it on the daily chart. This daily chart is not going to change the trend anytime soon. Everybody is anticipating a lower high on any bounce, even if we do break resistance. So we would just be looking at shorts having to cover and potentially reloading up around the 6,800 level. I've been pointing out how if the bounce on the daily follows through, we'll be looking for the exponential resistance. And I also highlighted how in the next couple of days, it's going to be at the 6,800 level, which is a price that has come into play multiple times in the past. So I am watching it. And if we do get that bull break tonight of this double top, 6,800 and the daily exponential resistance will be the target for that move. And really the exponential resistance at this point is 67.39. So it's even lower than 6,800. It's going to come into play pretty quickly after that bull break. So again, can't let too much bull euphoria kick in, knowing that just the 4-hour break is not going to do much to this daily trend change for the bulls. So that's where we stand. I hope you all continue to do good things out there. Getting back today from a nice snorkel trip with TheChartGuys Jason. Saw some sharks, and I had a funny, I was over on the other side of the boat by myself following these two sharks. They're about 5 feet. Another one was maybe 3 feet, and they were along the bottom, and it was a little bit murky where they were going. So I was following them and diving down and swimming, obviously keeping my distance but getting closer, and I lost sight of them in the murky water. And so I backtracked with my arms to push myself back to see if I could find them, and my hair all went in front of my face at the same time, and it scared the you-know-what out of me, and I thought that was a funny little scenario to be in. So I took some videos and some pictures there. I'll upload that at some point, but for today's end of the video, I'm going to do some redwoods. I told a story a while ago about how these squirrels were at the top of these giant pine trees dropping down these pine cones that were like incoming bombs as I was sleeping outside. My buddies were sleeping in the tent. I slept outside that night, and this is just us getting to a campsite where we were exploring the different trees, and these squirrels were waiting for us. I appreciate you watching. We'll check back in tomorrow. Again, at this point, I don't have to do anything with my trade. I don't have to make any kind of decisions. My stop loss is set, and I will look to sell on the bull break. I'll look to sell in the 6,600s plus. So 6,600, 6,700 is when I'm going to be scaling out. And again, right now, I can't set multiple orders. If I could set multiple orders, I would have scaled out of some of my position on this bull move for Bitcoin that just happened and was rejected. But to remain more protective, I have to choose the stop loss scenario. So if I could have had a stop loss set and sell orders set, absolutely I would have had sell orders that triggered in the mid 6,400s. And that's costing me profit. And I could reload those exact same coins right now for a decent chunk cheaper. So again, it is not an ideal trading environment. These exchanges are not giving us the tools that we expect as full-time stock traders, coming from an environment that is very developed for tools that we as traders need. We don't have that in this space just yet, and it's leading to us risking less capital and not being entirely thrilled with the space just yet. So I appreciate you watching. We'll see you tomorrow. Have a great Sunday night.